for my vanilla product in microfinance segment possibly won't work. We need more life cycle thing. We need more products. And when Diwakar wrote to us, we were very happy to see that this product is actually giving us a new array to have savings product along with insurance product. This is amazing. Possibly Diwakar and Anjani, they will tell more about that one. But I mean, from Sadhan's end, we are happy, we'll be happy, Diwakar, if couple of our members pick up this project and work with us. The other thing what Diwakar that they told us that he wants to work with a smaller MFIs, and also he can customize the product according to the need of the microfinance institution and need of the clients. That's another thing which has clicked with Sadhan, that we should promote this product through our members. And means promote means business deal is, I mean, always in the hand of the microfinance institutions, but we are happy in the outline of the product. That's what I wanted to tell. So over to you, Diwakar, Anjani, with your team for the presentation.
Yeah. So thank you, Saibalji. And before we get into a presentation format, I think I should give a little bit of a brief as to who we are and how we have come up with this sort of a product, or the institution itself in the first place. Because I think the people on the screen today who in the meeting are, I can see from Vigro, Mitrata, and of course Sadhan is there. But key points, Ranjanji and Dr. Akhilji, is that Credit Access Group as such, as you may be aware, we have been working in the microfinance segment for the last maybe close to 20 years. When I say working, firstly, Credit Access Group, as you know, it has been in place for the last almost close to 15, 20 years with investments into Equitas and Grameen Kota, and essentially in the same space as you currently are working and you are practitioners. So the point that we could gather from our experience over the last many years is that our segment of customers, actually, it is more a case of we reaching out to them rather than they being there and they coming to us. This is the core of what we call microfinance, because the needs of people, whether they are low income or high income or a medium. Hi, Karthik.
How are you? I'm so sorry. Great to see you, Diwakar.
Yes, boss. Yes. Very nice to see you once again.
Yeah, absolutely. Sorry, please continue.
Karthik and me, incidentally, we worked in the mainstream banking sector way back in the early 2000s, and now he's a practitioner and I'm also a practitioner. So it's not a coincidence that what I'm talking now is essentially taking forward our experience of working in the mainstream institutions and seeing how we can translate that experience into reaching out for the clients and giving the clients what they need. So when we talk of either a low income client or a middle income client or a high income client, essentially life is, it has got three aspects to it. We believe in this. And I will take some time here before we get into the specific product details and how we can actually get into the work, because this background is necessary as to why we are in this space. So Karthik, I was just mentioning about Credit Access Group's experience in the last 15 years in microfinance and working with the clients, and what made us look into this new element of business. Essentially, that's where we come from.
No, absolutely.
So typically life is revolving around life, living, and livelihood. We always call it a very important piece. And microfinance incidentally deals with livelihood in a sense. When we say livelihood, essentially, unless you have an income or an income generating activity, you can't really have a livelihood of your own. And I would say microfinance to a large extent has taken care of that piece, which is livelihood. Now, once you have a livelihood and then someone is working towards it, obviously, when there is a loss of income for any reason, whether we call it insurance, we call it health, we call it some contingency or some issue that can happen at any point of time in anybody's life, especially if the bread earner is losing his life, then the livelihood is lost. When the livelihood is lost, the living part of this family is completely messed up. And then obviously life ceases to happen for the family. So what we were looking at is as a group, we were looking at, let's say 20 years back when microfinance was very well known to a very few people, but was not as widespread as it is today, 20 years back. And today we speak as if, we also need to touch upon this aspect of how do we mitigate the issues related to livelihood. One of the key aspects. Yes, there are microfinance practitioners, there are microfinance institutions, there are loans available. All said and done, you have institutions or organizations across the country. But how do we really take the next step in terms of starting to mitigate the risks associated with livelihood itself? One of the basic elements, therefore, comes down to insurance, that is life insurance. So we felt that it is necessary to take the next step of touching people's lives in a manner that will actually help and benefit the families in a manner wherein the bread earner's loss of life will not affect a generation adversely. Because when the bread earner loses his life, the family actually suffers. So from that intent and background, we felt that setting up a dedicated institution to work with this segment of customers, only low-income segment customers. We are not a micro insurance company, but we are an insurance company dedicated to the low-income segment. Now, low-income segment is somebody who all we associate through microfinance, and that is the population which needs this particular product. When you call it an insurance, I think people think very differently. But I think credit life is very popular today, but credit life is nothing compared to what the family needs, because credit life is limiting the amount of insurance to the amount of loan. But a person's income and the requirement to insure is much beyond that. And our approach has been that let us customize and do things which the customers require. Whereas the customers are essentially the microfinance institutions like you, whether it is Vigro, Mitrata, or Pahel. Essentially, you are the people who are working in the field and you have the customers. And we believe working with you together, because we are not trying to force fit a product into your requirements or your customer requirements. We are trying to see how well we can take the concept forward and design the process. Ultimately, the product is very simple, but the point is the customization of design and the process is more critical, because what suits Mitrata may not necessarily suit the same way for Pahel, because each organization has its own ethos, its own approach, and its own ways of managing risks and its own business strategies. So our idea here is to be a provider of products and services in the insurance space for your segment of customers, and along with you design the processes that are conducive to the requirements. I would say this is the background of our company. And our company is essentially, I would say, a mainstream insurance company. When I say mainstream, we do not have any concession with regard to capital or solvency ratio or anything. We are on par with any insurance company in the country. We are licensed by IRDA to give the products as it is done by others. But we don't get into all the complicated products of ULIPs and all those fancy things which nobody understands, including the company's representatives themselves. So we stick to basically two products. When I say two products, one is a insurance product where the person pays money for the life, and when there is a death, the nominee gets the money. We call it a term life, Suraksha. That's one. The second one is when the person is alive, the person survives, he gets back some money. So we call that Samruddhi or Sanchay. Basically, he saves money and he gets back the money when on survival. So that is what we call a savings product. Because as an insurance company, we are permitted to essentially whatever is paid to us as a premium is actually savings. So technically speaking, it is a premium. And our product of a savings linked insurance plan where there is a regular payment of premium is what we call savings. And we offer these two products to them. And whatever you call, whichever way you look at it, it is a variant of either of these products. Either you get the money when someone is alive, or the nominee gets the money when there is a death. I think let's be clear about it. No need to really, let's say, complicate anything here. Conceptually, it's the same two products across. And here we are to help you, design it. When I say design it, the product, as I said, is simple, but design is more to do with sitting with you and understanding and what you require. And this is where the regularity of a premium or the longevity of the product is something that we'll work with. And here we are to offer you mainly a product essentially that will help your customers. The most important part is this benefits your institution, where your relationship with your borrower and the family actually gets strengthened in the process, because you enable them to save money through you with a company which is dedicated to them. And that ensures that your bond with them or their relationship with you gets essentially strengthened, which adds to your own fundamental core business of lending. Because in lending, the key to recovery is essentially that people are staying with you and they don't run away from you for any reason. And this product actually binds you and binds them into your piece much more stronger. So our idea is to not be a mainstream entity, but work alongside you and keep you in the forefront, and we remain in the background, but offer our product. So you are a company which will offer your product of a lending. You are regulated by, let's say, the RBI and the lending institutions. We are a company which is essentially regulated by the IRDA, and together we give a product that helps your customers and their families. So I would say I'll pause here, and I will be very happy to take your specific questions and how we can actually address your requirements.
So I had something actually here, Diwakar, and very many congratulations. I think you have kind of, blazed another trail in terms of, what the microfinance companies can potentially do on a scale in India. So many congratulations on that license and, getting this started. My very specific question was that today a lot of MFIs are looking at becoming corporate agents, in terms of this thing. So obviously, then once that happens at an industry level, I think it's likely to be an industry phenomenon for the next 6-8 months, given the way the rules have kind of undergone a metamorphosis, and the opportunity to serve our segment the way it is kind of coming up, right?
Right.
So once you do that, then how does Great Access? I mean, obviously you are talking of very specific vanilla products, which are likely to be targeted at this segment, given that you have a very solid understanding of the target segment. But that is the way to go, right? In terms of the opportunity for any MFI or potential partnership that has to emanate with Great Access. Is that a correct understanding?
Absolutely, you're right, Karthik bhai. The way to look at this is that the intermediary, many are going to a corporate agent route, essentially because the advantage of becoming corporate agent is that essentially it is more to do with the IRDA regulations, where a corporate agent is permitted to offer products of different companies. So you are in a better position to access products which are offered by different entities, and therefore most people are taking that route. Other than that, there is no real advantage, because what happens is there is a bit of a gap in terms of way people understand this entire concept of a master policy holder or a corporate agent. But the long and short of it is that a corporate agency enables a company to access products from different entities. That's point number one. And there are rules associated with corporate agency, which are more to do with the formalization setup within the entity itself, but that's more to do with regulation and compliance. That's not really a hassle. I would call it a more a process related thing. You need to identify a few people to ensure that they are trained as per the IRDA requirements, and once they are there in the system, it's deemed to be that they are qualified enough to offer the products on behalf of another company. So it's more to do with the formalization setup within your own organization. So corporate agency route is in a way bringing the mainstream entities which are in the lending space into the insurance space. I would put it like that. And which also enables you to choose from what you want or what you can really do. Because typically the insurance industry, although we are not going on that direction, we don't look at institutions as mere distribution partners. Whereas most of the insurance companies treat the corporate agents on those lines because they feel that use the corporate agency setup to trust the products which they have. Whereas we are taking the opposite route. We are saying that we identify an entity, we give the product that they want. In the process, they may be corporate agents or not, it doesn't matter to us. So
Exactly.
that is the way we are looking at it.
Fair enough. Great. Thank you.
Thank you, Divakarji. We have heard your proposal. That's good that if we can offer any savings product to our very poor customers, those who need really some savings. But at the same time, we have to think about that the premium portion, what they have to pay, what they have to deposit. So far, I can understand from your deliberation that it will be a money back policy like thing, if I am not wrong. If it is so, with the credit life insurance that we are usually doing for them, which is related to their loan. If anything can be attached with these, that once time they have to pay for their but that amount I don't think that will be very good savings amount. So for
Correct.
example, if you want us to sell the product of yours to them, I don't know, it can be approached, but I don't know how the people in the rural area, they will take it like this way, because it is a money back policy and they have to pay premium. So far I understand from your version, from your address.
Yeah. I will explain to you. I'll explain to you.
Divakar, do you want to do the presentation? Although I have sent your presentation to them, before meeting to have a look. Do you want to present that? Have a presentation for better understanding?
I think we'll put the screen pertaining to the two products,
Okay.
that particular slide. And
Yes, that will be
based on
helpful.
that, we can discuss. It'll be
Yeah.
easy for them
Yes,
to
yes,
understand
yes,
because
that
they're
will be
two
helpful.
different products. Yeah, sure. You
What are the specific, the product? If I can understand that, then only we can understand that whether it can be, as per their requirement, then only we can understand.
Absolutely. We'll just put the
Yeah,
screen pertaining to the products.
I'll just put that.
Yeah. Please.
Yeah.
Please.
Yeah.
Who is this My PC?
Yeah.
Are you able to see it now?
Yeah, it's visible.
Yeah.
Great.
Yeah.
Great.
So Ranjanji, this is essentially the two products I was categorizing broadly. Okay. So we would want to, take you through the Raksha product first, because you are familiar with that product, Raksha product. Raksha product is nothing but your credit life. Credit life essentially is an amount equivalent to the loan that they have availed, and they pay premium, one-time premium, and in case there is a death, the family gets protected by way of the sum assured getting adjusted from the insurance policy. So that is what is called the Raksha product, which you are familiar with. We have another version of Raksha where, let us assume that they don't have a loan, right? Say, and they still need to be covered, or rather, I would say it's more to do with the family being protected, and this is the core insurance. I mean, look at it differently, Ranjanji. We are essentially confining our insurance product to the amount of loan that the customer has availed. In a way, we have limited ourselves to that amount. But if you really look at their income, as you see today, they may be having an income of 2 or 3 lakhs per annum. but we are giving them an insurance of only 30, 40,000 or a 50,000 based on the loan amount that they avail. So we are looking at how best we can offer the Suraksha product, which is not necessarily linked to a loan, or rather we can work out with you if you are in a position to offer a higher amount of insurance to them through the Suraksha product, which is de-linked to the loan. So that is one aspect. Coming to the other one, which you basically raised, which is the Sanchay. Now, this is a savings product which we are talking, where the customer, your customer, can save every week. If you are having a weekly repayment, she can save a small amount every week. If yours is a fortnightly repayment, whenever you go to collect the repayment, she can save a small amount during that time. And if it's a monthly thing, she can save every month, and she can do it for as long as the loan is there, or she can go beyond the loan also. The idea here is that at the time of maturity, which is a 2-year or a 3-year period, or even a longer the duration, much better and beneficial for her. She will get some lump sum, by way of specific return also be assured. And most importantly, looking at the nature of our customers, very small savings amounts and the type of low income that they have, they can withdraw anytime. And we designed it in a manner where we give back the money that they have saved without any penalty. Now, this is something that no insurance company offers for various reasons, including the cost element. But because we are coming from a microfinance understanding and a background, we believe that this is a very much required feature for the client, and therefore we permit this. And when the client wants, again, she can take another policy. And the cost associated with this, obviously, we bear the cost, mainly because we understand that we need to provide this as a facility to the customer more than making a return on this particular product. So basically, the cost is something that we absorb here. So what you said.
Cost means what exactly?
See, normally, if you save any amount, if you make premium to any insurance company, and when you withdraw it in between before the maturity, they deduct a lot of charges.
Right.
We don't do that. That's point number one.
Okay.
Secondly, we are also not charging anything extra because they are saving every week. Normally, if you look at insurance companies, all this is done either quarterly or half-yearly or yearly. But looking at microfinance clients and the low-income clients, we are trying to customize it to time it with a weekly collection, which we are bearing without any cost to the customer. That's the difference.
During our initial meeting, so I understood that the savings product will be giving the interest at par with the bank, if I'm not wrong. Yes?
No, it depends on the term.
Okay.
It depends on the term. Yeah.
Okay,
Suppose
fine.
if you are doing a 1-year product, obviously it will be much lower. But here you need to also remember that we are offering the insurance. See, we are not a bank. We are not a equivalent of an recurring deposit, scheme. But when the customer actually, if there is a death when she's saving, we actually give a higher amount from what she saved, so that the bank doesn't give. So in that sense, our product is superior to that of a bank. But at the same time, as the term goes longer, let's say 3 years or 4 years, we match the returns of the bank, which is what we were trying to say. Essentially, what happens is when there is a death, the amount of money she gets is definitely much higher, and which no bank can give. That's point number one. And assuming that there is no death, and then she survives the 3-year period, the amount of return that she gets is mostly on par with what she gets at a bank. Of course, she can't really save every week with the bank, but we are giving that facility with her. So to that extent, we are close to the bank.
So it brings to me other question. So now you are telling that it may or may not be at par with the bank. So if I have saved the money weekly or whatever, fortnightly, I want to draw the money. I mean, nobody in my family, whatever, has died, but I want to draw the money because it was at that time I need the money. So in that case, will you deduct the interest, or What's the methodology in this?
So if there is a premature withdrawal before the maturity, we
Huh.
will give back the money that she has saved. We
So
will
no
not deduct any
interest.
charges. We will
No
not
int-
deduct any charges.
No, but
In
no,
that case,
no interest.
sir, in that case, probably there should there is a limited period, at least 2 years they have to save. Is there anything like this?
Yeah,
No.
we have designed it. Maybe Anjani, you can give that 1 year,
Yes.
2 year. Yeah.
Yeah, if she has to withdraw, suppose she says that I want to save for say 3 years continuously, and maybe in the first year she meets with an emergency where she has to withdraw. So in the first year we will give her all the money that she has saved until the date of withdrawal, right? But it so happens that in the second year, if she has to withdraw, we will give her whatever she has saved plus a little bit of the interest that she would have earned if she would have continued. Not the entire interest component, but of course, to the extent of the additional 1 year. So that's how the product is structured. So, Saibul, I hope this answers your question. Yeah, and
I,
to answer the other question was that there is no lock-in period per se, so there's nothing that she has to save to get a return, or there's no penalty. So even if she
Okay.
wants to save for 1 year and withdraw during that 1 year, there is no penalty that is
Only the saved
asked
money
for.
she will be back.
can
Yeah, in
I?
the first year, yes.
Yes. So actually, you see, I think few years back. So my name is Sharad Das. I'm actually from Guwahati, Assam, and company is Gaming Development and Finance Private Limited. We are a very small company here. We're working in the Northeast.
Hmm.
Just I have a question because
Yes.
few years back there was a product of LIC. They called
Hmm.
it as Jivan Madhur.
Hmm.
So I think 80% of the features what you are talking about is almost like the Jivan Madhur policy, which is every month the person who wants to have a policy, they pay 100 rupees or so every month. Then in between, if something goes wrong, then in case of that, they get back the entire amount as long as the policy period amount would have got deposited if
Hmm.
this incidents would not have happened. So, but these policies were from 3 years to 15 years.
Right.
So we did almost 28,000 policies under that
Hmm.
scheme. But later on, actually, we had to face a lot of problems because we also had some policies which are 10 years, 15 years, or 12 years, something like that.
Huh.
And it was very, very difficult for us to keep those people continuously for 15 years to continue with us
Right.
because there are a lot
Right.
of players in the field, so they have the all options to just shift to another company or get
Right.
loans from another company. So they leave you. So that challenge we had to face, and it was really a very, very, very big problem for us. But here again,
Hmm.
I mean, I do not know exactly what is the amount of the insurance premium or rather savings amount per month or per annum, and what will be the coverage, because that is also important. Like in Jivan Madhur, the person would
Huh.
have got back only 18,000 if somebody would
Huh.
have deposited for 15 years,
Huh.
100 rupees per month.
Huh.
So the total amount becomes 18,000 and would get back
Hmm.
only 18,000 or maybe 1,000 rupees or 100, 500 rupees more. So here, what is the policy amount or the premium or per month or yearly? I do not know, but what is that amount and what will be the coverage? Because when we are also covering that
Hmm.
loan product also, whatever portfolio we have, that also has to be insured. So what is that premium or what is the minimum and maximum term, and what is the maturity value? How
Yeah,
much
yeah.
Huh.
more you are getting?
Now,
So just
before
you
she
can throw
gets
some lights on this,
yeah, yeah.
please.
Before she gets into the specifics of, the sum assured and all that stuff, I'll tell you two things. Sir, I didn't get your name. Sorry. Gauhati is
Sharad
what I
Das.
said. Ah,
Shut up the
yeah,
sun.
yeah. That's G. So the point here is that we understand for our clients segment, where, the whether you call it an attention span or a relationship span with the institution, it's not going to be 10 years, 15 years continuously. They will have for 3 years, 4 years, and again they will avail a loan or something, and they will again get into another relationship for the next 4 years. This is how typically our segment works across, whether you call it through a loan or any other facility that we give. So the reason why we have not gone to 15 years essentially is because of the learnings we have had from institution like yours, where there have been issues to to retain people under the fold for a long-term policy. So what we looked at is essentially a policy up to 5 to 7 years, maximum 7 years, which ensures that your ability to handle the clients for a relatively shorter period of time is something that we can handle. That's something. So essentially, we try to resolve the issues that people like you have faced in the field. So many problems for keeping people for so long because they jump very quick. So that is something we have resolved in the design itself by making it a policy of 5 years or 7 years. That's one. The second point I wanted to talk before I give it to Anjani is the credit life is a one-time piece, one-time premium, which is paid at the time of availing the loan. I think that is something that one should completely look at it as a separate product. And what we are talking is a savings product, which is very different. So when you do a term life or a credit life, they pay the premium at the time of availment of loan. That is a separate contract in itself. And for the savings, they get into a separate piece on a regular basis. And maybe Anjan, you can explain the savings piece.
Yes, thank you for that question, Sharadji. So I just want to let you know that this product caters to the low income segment that you rightly said, right? And we didn't want to complicate this product in terms of sum assured or this and that. So what we happen to say that if the person saves, suppose 100 rupees. So, okay, to take your first question on the extent of premium or the savings amount, she can save at least 100 rupees on a weekly basis. So that is a minimum premium to answer your question. Of course, maximum, there is no cap as such. Because we wanted to also ensure that her premium does not go in by for paying GST. So we ensured that our product is aligned with the microinsurance regulations of IRDA, which says that you don't have to pay GST if the total benefit payout at the time of any incident, be it death or maturity, is below 2 lakhs. So that's how the product is structured. Depending on the amount of money she wants to save, she is flexible to save that amount for n number of years. And the death benefit depends on the amount of money she saved into a factor. So this factor again varies by years, and it can range from 10% to 50%. So if she saves 100 rupees in the first week and happens to die on the 8th day, then she's eligible for 100 into, say, 10% extra. So 110 rupees. So Sharadji, I hope I've answered your question, or if there's anything else I can help you with.
No. Yes, I got it. It means that actually this product may not be able to cover our whole portfolio in that loan portfolio. If the person takes, then of course, if she saves more, then certainly that amount can be covered.
Yes,
But
yes.
yeah, so then that amount will be very, very high. Then if say I need an insurance coverage also for a rupees of 1 lakh amount, so if it is a 2 years loan, so then the person has to save at least 1 lakh rupees in 2 years. Then only that.
So the idea can also be that she does not want to save the amount to repay the loan, because she will anyway being paying the monthly or the weekly installments, right? This is for the fact the savings product is structured for the fact that we want to habituate her to save on a regular basis. Even it can be small amounts, so that she can achieve her aspirational goals. It could be maybe buying gold for her daughter's wedding or getting her children educated. So it can be any other reason apart from just being able to pay the loan amount at the end of the loan tenure, because she will anyway be paying the monthly installments or the whatever the frequent as per the frequent repayment schedule. Uh,
So if anybody
No,
has
actually,
any question,
no, here, so no, I got it, but still I have some more questions. Like, if we continue to do this, if we would like to do this, then also it seems like we have to have some other products to
of
ensure
course, sir.
our
I mean,
loan portfolio, because
yes,
it
sir.
it will not be able to cover the entire amount. So we'll have to have again one more product to secure our loan portfolio. It will be something like that, because we are giving loans up to 1.5 lakh, sometimes 1 lakh rupees. So in that case, then we shall have to have another insurance product to secure my portfolio, because
So
this
that's
is
why we
this
have
is
the Raksha product, sir.
yeah, this is fine. I mean, it's since it is, nothing wrong with the product. But I'm saying that since we are also very, very interested or very, very concerned with our portfolio in the event of,
Right,
death or something like that of the
right,
nominee or the person who has taken the loan. So
right,
that also has to be ensured. So there we are already taking some insurance products where our loan portfolio is secured by way of ensuring that amount, and that amount
right,
we actually collect at the beginning of the loan itself when we pay it to the insurance company. And
right.
here it is more to do with the savings. So is there anything that you can think of that yes, this is the product, but
Hmm.
initial this may be X amount is maybe the premium for covering or securing the portfolio amount, and the remaining amount will be continuously they will be paying as savings. So something like that, then it will cover the both purposes.
Yes,
So
sir.
I
So,
don't know. I mean, that is what is coming to my mind. Otherwise, we shall
yeah.
have to take always two portfolio. I mean, two services. One is for this savings product, and the other is for the secure the loan portfolio.
Right, sir. So, Sharad sir, I'll be happy to discuss with you more in detail where we can co-create, because that's because, like Saibal sir mentioned in the initial opening words of what Cali believes in, we do believe in co-creating a design that suits your customer needs and suits your needs. So, I'll be more than happy to sit with you and design a product that fits your customer, and we have the capabilities to do it in house. So I'll definitely get in touch with you to discuss more on this, sir, and we should be able to design something to help you out.
Okay, okay. ठीक है. Thank you.
Mr. Ranjan, do you have any question or anybody
Uh,
else?
just one more thing. If Anjali ji can quickly calculate one thing. Say, for
Huh.
example, in example, just a live case, a
Right,
borrower wants to deposit 1,000 per month.
right.
If she deposit this money in her loan tenure, say for example, it is for 2 years. So
Huh.
2 years means 24,000 is
20.
will be her deposit amount.
Yes.
uh, um, in any mishaf, what will be the sum assured money, and what will she get back in after 2 years if she wants to withdraw the money after 2 years? It will give an idea of so for example, in that loan tenure period, after 1 month or two
Right.
months she dies. In that
Yeah.
case, her nominee will get the sum assured amount. So for I believe
Right.
either the sum
Right.
assured or the what she paid, that usually in insurance companies 105%, if I am not wrong,
Huh.
out of these two, whichever is higher, usually she get the nominee gets like this amount. So what will be the sum assured for our 1,000 premium? And age is also a factor. say for example, the woman is 40 years or 40 years.
Hmm.
So if you have the calculator in your mobile, can you just tell me what will be the sum assured amount?
Sir, so in case of death, it will be somewhere around 26 to 27,000, something between that,
Okay. Okay.
right?
Okay.
And in case of maturity, it will be around 30, a little less than 30.
No, इतना नहीं होगा.
Yeah.
इतना परसेंटेज इंश्योरेंस कंपनी में नहीं है. बैंक में भी नहीं है. 30,000, 24 out of 24,000, she will get 30,000. So higher rate of interest. I don't think so. Anyway,
Sorry, it will be around,
let
it
me-
will be, yes, sorry, sir. It will be around 25,000, 25,500.
yes. This is
Yeah,
this
yeah,
this
yeah.
maybe. Okay.
In case of death,
Okay.
of course, it will be a little higher for 2 years.
Little higher. Okay. ठीक है. Thank you. No question
Yeah.
from my end. Thank you very much.
So anybody else? I think nobody has any question. And
So, Soibal, I
Yes,
think,
please.
I have already told, like, this is something like it will be completely, I mean, savings kind of product. It will not be like, it will not be as per, maybe, I mean, for securing the portfolio, it will be little difficult because if somebody has to secure the whole portfolio
Mhm,
with this amount, then the
mhm.
premium amount will be very, very high.
Okay. Okay.
Because premium amount, because one has to do a policy for 1 lakh rupees. If the loan amount is 1 lakh rupees, so if the loan is 2 years time, so that person has to deposit or save 1 lakh rupees in 2 years time. So that way, I think this will be little costly. I think maybe I may be wrong, but it seems what I have understood, this is a little bit costly. So, but if it is done exclusively as a savings product, does not have anything to do like with securing the portfolio or so, then definitely it will be helpful, or it will, maybe people would like to save smaller amounts, so that definitely can work. That is
So,
what I have
sir,
understood actually. Maybe I may be
yeah.
wrong.
Sir, I'll also share a bit of the thought process that went behind this product, right? So we were in the field visits where we did go and visit multiple groups where microfinance loans were provided. For at least female, it becomes very difficult for them to go to a branch very frequently to save. And if they can save at the time of getting a loan and at the time of repayment, that ease of saving and the group model itself pushes them to save to achieve a certain desire. Of course, they have taken a loan for their livelihood, which they do repay by earning from the livelihood that they have. But the savings at the doorstep, it engages the customer to your organization in a stronger manner than she would have to go and save to a bank in a bank. So it's also to do with the mindset and the retention of the customer for an MFI, rather than just looking from the perspective that can the savings really help her pay the loan that she has taken.
But you can always take it forward with the specific institution. Like you can always have a conversation with Sharadda and
Yes.
give him more understanding on the product, and if he is willing, then he can take it
Yeah, for sure.
forward. This is just the introductory meeting, and what we wanted to bring in is a different kind of product, and which may be helpful for the microfinance institutions and its client, because the savings product what we generally do not get if we are not BC. So this was our thought process. So now at taking it as a business model will be at your prerogative, all the MFIs, our members. So they are very, I mean, what do you call, well understood people. They can understand the product and they can take it forward. So my request would be have a look, have a talk, and then see if you can take it forward. And and Diwakar, if you want to tell something.
No, thanks, Saibalji. This is more to make them know and aware that
Yes.
we are here to offer a product. What we currently have is one, but here we are to whatever you require. For example, he was mentioning that this is how he understood a particular product and he wants a different one. And we are here to discuss with you what you want and see how we can take it forward. That is the way we are looking at it. The precise point is exactly this. No product can fit into everybody's requirement.
Hmm.
And
True.
we believe that it has to be changed and customized.
Customized.
And that's where we come into the picture. And we are willing to do this. So we don't believe in the concept of one shoe fits everybody. We want to customize and tailor make it to the requirements. So we'll be happy to hear from you what you need, and accordingly we can design. That's where we stand.
Yep. So any question? There is a question in chat. Is it a question? Akhil is writing that he, okay, I know that he had to go. But anyway, thank you all. We had a fair bit of idea that what the proposal is, and I would be happy to connect you with the institutions, and let us take it forward. Let us see how far can we go, and then maybe it is impactful somewhere. Maybe it may not be that much impactful somewhere, because the diversity is actually the core of our microfinance. So it cannot be one. It cannot be blanket approach everywhere. So we also understand that one. We wanted to bring that in the market. There are a lot of things happening, but I told in the onset that in the market there are a lot of things happening. A lot of interesting products are coming. So let us have a look. Let us have a discussion. Let us take it forward wherever possible. Thank you. Thank you, Diwakar. Thank you, Anjali.
Awesome.
Thank you
Thank you.
all.
Bye.
Thank you all.
Thank you.
Thank you very much.
Karthik
Thank
bhai
you.
will separately connect.
Okay, thank
Yes.
you. Thank you, sir.
Thank you.
Thank you.